What's up guys, Kieran here and you're very welcome to the channel. In the past couple of weeks I've invested so much into this one position that has grown to become 25% of my overall portfolio. And honestly, I don't think I'm finished buying it, especially if this drops. I'm buying it because I think it has the potential to 10x over the next 2 to 3 years. Conventional wisdom says that this is a really risky move, but hey look, I think the risk is in my favour, hence why I'm buying. And you know what, I'm also okay if this goes to zero. I've made the decision, I'm comfortable to absorb that risk. That's just me at my stage in my life, given my personal situation and my financial situation at the moment. Now you probably either love this investment or you hate it. If you love it, great, sit back and enjoy listening to me talk about it. If you hate it, well then all I'd say is just before you hit the dislike button and before you click off the video and comment something mean down below, just hear me out, okay? I'm going to explain in a rational way why I think this can at least 10x over the next 2 to 3 years. If that plays out, well then honestly the sky is the limit. If it doesn't, well then look, as I said, it goes to zero. Boo-hoo, I'll get over it. Okay, so I'm going to put you out of your misery. I'm not going to leave you in suspense any longer. You've probably already guessed it, but if you haven't, I'm talking about Bitcoin. Now obviously, please don't take this as investment advice. I'm just some idiot on YouTube. I'm not a financial advisor. This is just my opinion. Always do your own research before you make any financial decisions. Bitcoin has historically been very, very volatile, so it's not for everyone to own, especially at such high percentages of your portfolio. But I've done my research and I'm strapping myself into the chair and I'm holding on for the long term for the ride. Okay guys, so I actually did a video on Bitcoin a few weeks ago where I looked at it as objectively as I possibly could. I actually thought it was a very good video, so I'll link it up above and down below. If you're interested, check it out after this one. But long story short, I went down a complete and utter rabbit hole. And some weeks later, here I am, a changed man, a converted Bitcoin evangelist, or whatever the hell they're called. You see, one of the things I've learned in the last couple of years since I started investing is I was far too conservative. And I've missed out on serious opportunities because I just always thought I could be wrong or that I was wrong. You look at all these books about risk and all this and you're trying to be as diversified as you possibly can, you know, and you just don't have confidence in your own research and your own ability to pick a winner. Well, I have confidence in this, so I'm going, you know, all in, so to speak, on it. That's not to say I'm definitely right. I'm fully aware that I could be wrong, but I've done the research and I believe I'm right. So I'm putting my money where my mouth is. And before this thing drops to 2 grand and everyone's in the comments going, I told you so, you shouldn't have done, you idiot. I'm okay with that too. If it drops, happy days, I'm going to be buying more, okay? That's my mentality here. And unless you have the same mentality, I'd say stay away from this because as I said, it's historically been extremely volatile. Okay, so let's talk about my price target first. As I said, I thought Bitcoin has the potential to 10x over the next 2 to 3 years. That's $100,000 per Bitcoin. Well, how the hell did I come up with this? Well, I actually didn't, but a well-known individual in the crypto space called Plan B did. Plan B goes by his alias because he lives in 2 worlds. During the daytime, he's a quantitative financial analyst for some big German investment bank. And at nighttime then, he wears his crypto cape. He goes by the alias because he doesn't want his crypto escapades to interfere with his day job and for everyone there to think he's a bloody nutter. And honestly, I don't blame him. And in case you didn't know, quantitative financial analysts look at extremely large data sets and use mathematical models to try and predict where things are going in the future. So basically this guy is shit hot at data analytics, and Plan B got famous in the crypto community by posting his stock to flow model on Twitter. His model was able to explain the price performance of Bitcoin since its inception with an unbelievable degree of accuracy. And with the realization that the past is explainable with his model comes the possibility that the future is predictable. So what the hell is a stock to flow model? So this model is traditionally used to predict the price of monetary metals such as gold and silver. It works on these commodities and not others because gold and silver tend to retain their value over time due to their relative scarcity. And it's for this reason that they're considered monetary metals and others aren't. Bitcoin is of course similar because its supply is predetermined by the protocol, and this cannot be changed. You see, there will only ever be 21 million Bitcoins created and put in circulation, and that's it, it's finite. You see, the Bitcoin mining process rewards miners with Bitcoin, but this reward size is cut in half periodically to reduce the flow of new Bitcoins. This process is called a halving, and we just went through one in May. I'm sure you've seen videos on YouTube about it or read stuff online. Roughly this process happens every 4 years, okay? And basically it's inbuilt into the protocol, and it means that Bitcoin is deflationary by nature. It gets harder over time as the supply gets reduced. And because of this reduction in supply, it's going to take roughly 120 years for all the 21 million Bitcoins to be put into circulation. So clearly Bitcoin is scarce, and in fact far more scarce than gold or silver. And with a market cap now of over 150 billion, it's clearly used for monetary purposes. Whether you think it or not, it's indisputable. And it's for these reasons that Plan B got the genius idea to apply the stock-to-flow model to Bitcoin to try and understand its price. So how does the stock-to-flow value work? The stock-to-flow ratio takes the total current supply in circulation and then divides it by the current supply rate. The resulting number shows how many years at the current production rate are required to completely restock the current level of supply. So for example, gold has a production rate of around 3,000 metric tons per year, and the current stock in the whole world is estimated at 185,000 metric tons. So if we put that in the previous formula, we can see that it's 185,000 tons divided by 3,000 tons, and that equals 62. So this means at the current production rate, we'd need 62 years to dig out all the gold that's currently in circulation. The higher the number here, the greater the scarcity. Now let's see how this relates to Bitcoin. There are around 18.4 million Bitcoins currently in circulation, and 900 Bitcoins are generated every day. That's 328,500 per year. So if we put those numbers in the stock-to-flow formula, we have 18.4 million divided by 328,500, that equals 56. So that means we would need 56 years of current Bitcoin production in order to produce the current stock. At the time of the next halving in 2024, Bitcoins will be produced at a rate of just 450 Bitcoins per day. And by that time, the stock-to-flow value will increase to roughly 113. The key takeaway here is that within the next 4 years, the stock-to-flow ratio of Bitcoin is going to go above that of gold. So if you think that there's any value in this model and that it's any way accurate at predicting the future price of Bitcoin, then we can clearly see how the price is going to go absolutely astronomical. And I'm going to show you that now when we look at the chart. Also, if you're interested in hearing from Plan B directly talk about his model, I'm going to link down below in the description a couple of really good interviews that I've listened to over the last couple of weeks where he's spoken directly about his model. So don't trust me, go to the source and go listen to the man himself talk about it. It's a really compelling case. Okay, so let's take a look at the stock-to-flow model here. I'm on a website here called lookintobitcoin.com, and basically it charts the stock-to-flow model over time. And what you're looking at here is basically the Bitcoin price in these dots here, in these color gradient dots. And what the colors mean is the days under the next halving, okay? So from red all the way to purple, red being, we've just gone through a halving and we've got 1400 days to the next halving, and then purple meaning we're just coming up to a halving. So if we look at this most recent kind of run here, we can see that we start here red, we've just gone through a halving, and we go to yellow, green, blue, all the way up to purple, and then we go through a halving event and we're back to red. Okay, so that's what that means. And then this red line here basically is the stock-to-flow value. Okay, so obviously Plan B came up with a stock-to-flow value here, and then he imposed that directly on top of the Bitcoin price. And what he saw here was this unbelievable correlation, right, between stock-to-flow and price. Now, of course, you can see here, this is the variance in the model. Sometimes it's below, sometimes it's above, right? But what he did was he calculated an R-squared number, which is the statistical number for how good of a fit this line is per the price. And he got a number of something like 0.95, which is just a ridiculously high fit, right, for any kind of statistical model. What you see here in this kind of increase every time, that's basically we go through a halving and then the stock-to-flow increases. and this is a 365-day moving average, hence why the gradient is kind of at a 45-degree angle. It doesn't just shoot straight up, right? The actual stock to flow value does, but price will never move as quickly as the stock to flow value. But essentially this red line is almost acting like a gravitational pull for the price, okay? So his whole thesis is, well, it's predicted these bull runs in the past where we've gone from 500 up to 20,000. You know, we overshot the stock to flow value, which was like 5.8, but as I said, it actually a gravitational pull, so the price came back down to it then, and it's since kind of oscillated around it. Now we've gone through another halving, so the stock to flow value is going to increase. Okay, so the question is, what's going to happen to the price? If the model is accurate, which it has been historically, well then the price is going to basically grow to meet this value, which is 92,000. Right, then we'll see then in another 4 years we go through another halving, and the next prediction is $1 million. So pretty crazy stuff if it turns out to be true. Holy shit. If not, then whatever, I've lost a few quid. Now my price target for Bitcoin isn't $1 million, okay, it's a 10x, it's 100 grand, right? I'm going to talk about now some of the catalysts that I think might come about in order to fulfill that over the next 2 to 3 years. So honestly, there's lots of potential catalysts that I can think of. None of them really mean good things for the average person. Hence why Bitcoin is commonly referred to as portfolio insurance. However, I would like to discuss two that I think are most likely. The first one I see, and the most imminent one, is the involvement of institutional investors in Bitcoin. As I'm sure you're probably aware, macro investor Paul Jones recently came out and publicly said that he's put money into Bitcoin. His thesis is basically that the amount of quantitative easing that's going on at the moment is going to lead to huge inflation, and he thinks that Bitcoin is a good hedge against that inflation. He's also referred to the price performance, and he's called it the fastest horse in the race. This kind of vocal support for Bitcoin by the likes of Paul Jones goes an awful long way in pushing institutional investors into Bitcoin. If you can imagine right now, after hearing that, there's probably a huge amount of institutional investors just toying with the idea of getting in. And if the next bull run involves institutional money, right? Last time it only involved retail investors, but if we see an inflow of institutional money and serious case of FOMO, then the price could easily go parabolic. When we look at the total global assets under management, they're expected to reach 100 trillion this year. Over half of that is in pension funds. So if every fund just decided to put 1% of their assets into Bitcoin, that would be a 10x straight away. Someone who talks about this in a really clear, articulated manner is Raul Paul from Real Vision, and he's done a couple of really good interviews recently where he's come out very vocally and declared his level of bullishness for Bitcoin. This guy is a well-known macro investor, and he's clearly after coming around to the prospects of this asset class. If you're interested in this topic, I'd highly suggest you go and check out some of his recent interviews. Another person I follow is Lynn Alden, and she is a really well-known person in the investing space. She's really well-known on Seeking Alpha. She's got her own blog, lynnalden.com, and I follow her a lot. She's a really, really smart person, and she's as well come out publicly and said that she's put some of her portfolio on Bitcoin. So these three people, I've only mentioned three, there's lots more, but they're what I'll call the tastemakers. They're the start of institutional money coming in. Now, Lynn Alden isn't institutional money, either is Raul Paul, but they do have an institutional following. And I've no doubt that these people coming out vocally, declaring their bullishness on Bitcoin and declaring that they're putting a percentage of their assets into Bitcoin is going to change the rhetoric for Bitcoin from an institutional perspective. The other catalyst I see then is far less glamorous than the first one, and I can see it happening probably further down the line, but that's the collapse of fiat currency. So in 1971, the dollar was completely unpegged from the gold standard. Previous to this, the US dollar was actually a receipt for gold. When it was unpegged, the world entered a new era where all money was simply paper money. Because all money was now unpegged from any fixed asset such as gold that has a limited supply, the level of printing that the central banks were now capable of became unlimitless. And we can see that now today. The amount of printing going on is just phenomenal. And if we look back at the history of paper money, also known as fiat money, we can see that it always ends in disaster. With no tie to any fixed supply assets such as gold, governments always get overexcited and end up printing too much money. This is just human nature. And we can't expect anything else from the current government and the current central bankers. Since 1971, because the US dollar went off the gold standard, so did all other major global currencies, because they are all pegged to the US dollar. So how is this grand experiment going to play out? Well, ultimately, I think it's going to leave people looking for safe haven assets. Some will flock to gold, and others, like myself, are going to flock to Bitcoin, or maybe both. Saving in fiat currency is leaving you exposed to value confiscation by the governments and the central banks. Every time they print money, they're literally stealing purchasing power away from anybody holding fiat currency. Deficit spending is just another fancy way of saying we're stealing your money. Long story short, I think that Bitcoin has the potential to become the people's money. Pure capitalism in its finest. I think the fact that we're already at 160 billion market cap says that this train has started and it's building momentum. Once that momentum gets bigger and bigger, it's going to be unstoppable. And as the momentum gets bigger, the price is going to grow, which is going to create more momentum. More people are going to FOMO to get in. As the price grows, trust grows. People want to put their money in this growing asset because they're sick of stocks, bonds, real estates, and having to diversify across all of these things just because fiat is so shit. We're also at the end of the long-term debt cycle, okay? Ray Dalio has been really vocal on this. Most of us are aware of the short-term business cycle. Every 5 to 8 years we go through this little boom bust whereby households get over leveraged and businesses do as well, and they need to deleverage essentially, right? But now we're at the end of the long-term debt cycle where governments and central banks are over leveraged. They've used all the monetary policy they can use. We're already at 0% interest rates, okay? And we're on round feckin' gazillion of QE infinity. There's nowhere to go from here. They don't have any more to do to try and keep this train moving. Maybe they can keep it going, but if they can, it'll be the first time ever in history that they've been able to do it, okay? But generally what's happened is this has led to huge currency devaluation. Okay guys, so I think you've got the idea. I'm clearly a Bitcoin bull. Call me mad or maybe agree with me, I don't know. But I'm really hoping that the price drops one last time, some cataclysmic drop, so I can average down and prepare myself for the next bull run. If you enjoyed this video, please give it a thumbs up. It really helps me grow the channel. And if you haven't yet, subscribe to the channel for more investing related content just like this. Let me know in the comments below if you are buying Bitcoin or not, and if you believe that $100,000 is achievable, or if you just think I'm a lunatic that's basically flushing my money down the toilet. That's it from me. Thanks so much for watching. Have a lovely day, and I'll see you in the next one.